We are everywhere.
Good morning and welcome to BloombergQuint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. 490 people are now dead and more than 24,000 affected by the coronavirus in China, with drug companies claiming that trials for the cure could begin as early as next week. The government clarifies that TDS of 10% will be levied only on the dividend paid by mutual funds and not on the redemption or the capital gains accrue as a result of it. Bharti Airtel reports a loss after factoring for exception items worth 1,050 crores in what was otherwise an operationally strong quarter. And India's under-19 cricket team makes it to the finals after beating the Pakistan team by 10 wickets. Let's take a look at the trade setup for the day. The markets, it's very damaging news that the death toll from the coronavirus is continuing to move up. But leave the humanitarian factor aside, the equity markets are digesting that and moving ahead is the point that I'm trying to make. Tesla yesterday led to the Nasdaq hitting all-time highs, was up about 2%, and the Dow and the S&P 2 doing really well for themselves in the session. And that is percolating down to the rest of the Asian screen as well. Frankly, if you look at across the board Asia, there is a tinge of green and a strong one at that. We have a start from the SGX Nifty, which looks like a bit of a consolidation. We also had a very strong move in trade yesterday. So maybe the morning could be a day of consolidation, but we'll get to that morning of consolidation. But it'll be interesting to see how we shape up our course. Keep in mind, coronavirus is having its impact felt on the other asset classes. So while equity markets are digesting and moving ahead, we can't say the same for the commodity space. And the fear still weighing in almost all of the major commodities, if you will. So that, I mean, crude, copper, etc. There's a lot of charts out there on the terminal which speak about what Dr. Copper is indicating for the near term to the medium term. But for now, the overhang of the coronavirus stays on these demands. So even if the equity markets are doing well, it's not necessarily that base metals, commodities, and those linked stocks could actually continue to do well. Keep that at the back of your mind. But as I said, the SGX Nifty indicates that, and maybe, just maybe, the start and the morning could be a morning of consolidation. So we might have a start which is flattish to maybe marginally higher. The SGX Nifty could well be deceptive, but I reckon that the private banks would be the key monitorable. After taking a stick for the last few days, yesterday was the first day when we saw a bit of a bounce. We were talking about how the nature of the buying suggested that maybe some foreign money could have come in. Let's see if private banks continue to rise in the session today. That would be the key monitorable. Frankly, from a weekly options expiry perspective or weekly expiry perspective, I think traders are betting on a fairly wide range. So if you look at the maximum OI on the call and the put side, it's a day to go, and it's a very wide range, 11,800 to 12,200. You don't normally see this. I mean, the last few times that I've seen, the range is fairly narrow. This time around, it's a fairly broad range that we're seeing from the options expiry perspective as well. So maybe traders are a bit undecided about what happens over the next 2 days, and one can't blame them really. Flows positive yesterday, marginal at that, but positive. So DIs continue to buy, but the 3 days of incessant selling by the FIs took a bit of a pause yesterday. A minor buy number, which isn't too bad either. What to watch out for in the session today? Not too much in terms of nifty names, but yet another day wherein while Cipla comes out on the index, and which is the large name, but a lot of very important broader market names which you would watch out for, particularly from the pharma space. It's a big day for pharma, but look out, Indiabulls Housing is a very interesting set of number to watch out for. And after Asian Paints doing what it is doing, a set of numbers from Berger Paints important. As I said, Cipla is one, but look at the broader end. There is Cadila Healthcare which comes out with numbers, Divi's comes out with numbers, and one would watch out for Mass Financial as well as Max Financial. Both of these very active stocks, and therefore what they do in terms of results would be important as well. However, what are the stocks that I would be watching out for in the session today? 3 or 4 that are important. I won't dwell too much on Bharti because we'll talk about that a bit immediately, just immediately on first word as well. But the numbers came out the stock ARPUs is stable in Q3. To few people, marginally higher than what was anticipated. I remember Somit's number, and I think the ARPU numbers have come in just marginally a shade higher, and therefore we will call them stable. But let's wait and watch what the stock does in the session. It's been an active stock again, 518. It's been on the rise. Even on Saturday, it was in the green, and I think it's done reasonably okay for itself. Tata Global. Well, now the revenues were flat, some expansion on the EBITDA and the net profit front, volume growth of 5% as well. But I think the fine print suggests that there were weak margins in the domestic and the international tea business, which was a key negative for Tata Global. So do watch out for this one. Avanti Feeds, results disappointed. The stock has done so well. You wanted the quarter to look good. That hasn't quite looked as well, for at least in terms of quarterly performance. Unfortunately, the management has not spoken, but it'll be interesting to see if they do indeed talk about what happens, what is happening in the current quarter, and how would they end the year with, because these numbers leave a bit to be desired considering the kind of move that we've had on the stock price. SRF is the important one. Remember yesterday in the dealers check, Darshan was mentioning about how the con call for SRF becomes very important, and I think they have given some pretty interesting comments on the con call as well, especially saying that they reiterated the guidance for 40-50% YOY growth in the specialty chemical business and the possibility of beating the guidance in the chemicals business for FY20. Let's see if the street takes this well. Difficult as it may, if the management is saying it, maybe the street will give credence to it. Let's see if the stock reacts. Last but not the least, Bharat Wire Ropes. So while, keep in mind, it seems that Motilal Oswal and Ramdev Agarwal have bought these shares, but I think it's an internal account transfer because MOSL held the stock for long. However, the street may still react. So if indeed the stock reacts positively, keep in mind this is not necessarily a fresh purchase, but more an inter-promoter transfer or an inter-transfer that happened. And therefore, maybe the excitement would not be warranted. Keep that at the back of your mind. Let's tell you what's lined up on First Word today. It's a collection of the top editorial stories that we believe we should bring to you. First up, Somit gauges the impact of lower crude prices on Indian companies, temporary as it may. It's important to analyze that. Vishwanath then joins in to talk about what two Reliance Group NBFCs have proposed to their lenders. We go back to Somit for a detailed analysis of Bharti Airtel's third quarter earnings. And that's an important element to monitor in the session today. Okay, let's start off with crude oil, which slipped into the bear market after it witnessed the worst start to the year since 1991. But as a large importer of crude, India is poised to benefit from this fall. Somit Sarkar is standing by with an analysis of how crude prices impact different countries, different industries in the country. Somit, it's been quite a rout in the oil market, isn't it?
Well, yes, definitely. Yes, if you see, Brent crude has marked its worst start for the year since 1991, dropping nearly 17.1% from the start of the year. Now, this is because of the concerns around coronavirus, which is expected to hurt the global economy and by reducing the demand of fuel in a well-supplied market. And as you can see, in 2020, crude prices have so far dropped nearly 17.1%, marking its worst start to the year since 1991. So let's see the sectors which get impacted because of this. Firstly, and definitely the oil explorers, because if you see, ONGC and Oil India, their realizations are expected to come in lower because of lower crude prices, which in turn will hurt the margins of these companies, because most of the cost for an oil explorer is fixed, and if they earn lower revenues, it means that the margins will come down because of this lower prices. In fourth quarter of financial year 2019, as you can see, when crude averaged lower, the margin of ONGC, the EBITDA margin of ONGC had come down to 46.2%. Moving on to oil marketing companies, now the impact on oil marketing companies is kind of a neutral, because usually they pass on the benefit of lower crude prices to consumers by lowering the fuel prices, but lower crude prices at least gives them the leeway to earn higher gross marketing margin by not passing on the entire benefit. So that is one positive for the oil marketing companies. But falling crude prices also means inventory losses. So kind of the impact on the oil marketing companies because of a fall in crude prices is neutral, because higher gross marketing margin will also mean that the inventory losses for the oil marketing companies.
Somit, how about the sectors that benefit from the oil rout?
Well, definitely aviation, because firstly, let's start off with aviation. Definitely aviation, because 1/3 of their total cost is on fuel prices, and a lower fuel prices in an environment where the ticket prices have been lower because of a slowdown in economy will definitely lift the margins of Indigo and SpiceJet. As you can see, whenever the crude has been lower, the fuel cost per seat kilometer for both Indigo and SpiceJet have been lower in that quarter. Following with the lubricant manufacturers, now crude oil is the key raw material and which will impact the operating margin margins of all the two lubricant manufacturers in India, that is Castrol India and Gulf Oil. Now, in the first quarter of financial year 2020, the margins had come in lower for both the companies because of a higher crude prices, and in the second quarter of financial year 2020, if you see, the margins had seen an uptick because of lower crude prices. Now, the uptick is not higher because some of the benefits were passed on to consumers, but if you see the trend, lower crude prices have definitely benefited the lubricant manufacturers. Coming on to the paint companies, now crude accounts for nearly half of the total expenses for a paint companies. Now, all paint companies have witnessed an expansion in their gross margins whenever crude has averaged lower compared to last year. And we see in the second quarter of financial year 2020, when crude had dropped nearly 18% compared to last year, the gross margins of all the three paint companies has expanded by nearly 240 to 290 basis points compared to last year. Now, coming on to the tire companies. Now, tire companies use synthetic rubber and carbon black, which are crude derivatives, as raw material. As crude price drops, this leads to a drop in the crude derivative prices also, which in turn aid the operating margins of these tire companies. If you see in the second quarter of financial year 2020, when crude dropped to $62 per barrel, gross margins of all the three companies had expanded. And as you can see in this chart, MRF, Balkrishna and Apollo Tyres had seen a surge in the gross margins, which ranged at around 40.5% to 56.3%. Lastly, coming on to cement companies, now directly and indirectly, cement companies have nearly 40 to 50% of their total cost related to crude, and a rise and drop in crude prices compared to last year definitely leads to a contraction or expansion in the operating margins of the cement companies. As you can see in the second quarter of financial year 2020, when crude had dropped by nearly 18% compared to last year, the gross margins and the operating margins of all the three cement companies that I have mentioned here, that is Ultratech, Ambuja and Shree Cement, had expanded in the range of around 300 to 800 basis points compared to last year.
Well, thanks, Somit, for putting all of those into perspective. I repeat, we are cognizant of the fact that these prices fall is temporary in nature and not necessarily stay at these levels. But you got to remember that 2 months ago, or 2.5 months ago, crude prices were trading nearly $70 to a barrel. With the coronavirus impact, we are not saying that crude prices have fallen and they will stay at these levels, but even if they rise a little bit from where they are right now and largely stay lower, which is what the general consensus seems to be right now, then these sectors will benefit or lose out accordingly. Maybe not as much proportionately, but definitely will benefit or lose out as a result of the crude price fall from the $70 to a barrel mark. So you've got to keep that at the back of your mind. Do your analysis your way, but these are some pockets which are important to keep in mind when you're looking at the crude price fall, and Summit tried to do just that. Okay, as I said, it's a big day for earnings for pharma. One Nifty company, 2 or 3 mid-sized companies as well. Not mid-sized, really large companies, but not in the Nifty. But Cipla is the Nifty company that is expected to report the healthy growth in the December quarter, driven mainly by the US and the India businesses. Darshan is standing by with what the analysts are pricing in. Darshan, important day for pharma, and more importantly for Cipla. I remember your piece that you did some time back, which said that Cipla doesn't get impacted as much by the US issues, but they also have had their share of issues now.
Yeah, so US is there, and I'll tell you why Cipla is important. First of all, it's a trader favorite stock. Among the pharma companies, I think Cipla is one of the highly traded counters. And secondly, after Glaxo disappointed on the India business because they have a large listing, it'll be important to see how Cipla does, because Cipla is one of the largest companies in the domestic market. So to get an indication of how the domestic market is panning out, Cipla number becomes important. Now, firstly, we are seeing an 9% growth as far as top line is concerned. On the profit front, we are seeing a 30% growth that will come in. EBITDA will be strong. A 21% growth on the EBITDA front is something that will come in, and that will be driven by the high value products in the US market. So basically, the other thing is the gross margins. EBITDA margins are expected to come in, but the gross margins are also important, in line with the guidance of 65 to 66%. They haven't been doing well in terms of gross margins, at least over the last 1 or 2 quarters. Apart from it, individually, the domestic business was first impacted in the first half because of change in distributors, because of the trade generic business. The management has said that, now this is stabilizing and growth will come in from this quarter. So it's important to see whether growth actually comes in this quarter. So 8 to 10% growth is something that we are seeing on the India operations. On the US front, on a year-on-year basis, it will be a 10% growth, but sequentially, yes, there will be some bit of impact that will come in on a quarter-on-quarter basis. Apart from it, we we are seeing close to 125 to 130 million dollars revenues coming in. A couple of products competition is intensifying in Sinacelet. Voltrogen Gen is something that will aid revenues, but there were no major launches that has come in this quarter, and there has been a bit of price erosion. So US is important to watch. Probably it will be soft. The other businesses, we are seeing moderation coming in South Africa, emerging markets, and Europe. Europe on a base will be up 5%. But there is pressure on the tender business in South Africa, and emerging markets also there is a lot of pricing pressure, which we're seeing that probably will come out. But Cipla will report numbers at the fag end of market closing today.
Yeah, they typically come out at 320, 325. Darshan, what is that one number that you would definitely watch out for? One number or one release from that statement which could move the needle on the stock either direction?
So I think not one number, but I think 125 to 130 million dollars US revenues and gross margins, whether they are in line or whether there is recovery in the Indian market. So these are the three numbers I'll actually watch out for.
Okay, the US numbers at 125, 130 and gross margins recovery, whether it comes
65 to 66% if that's the guidance that they're given, if the gross margin comes there. And there were a lot of problems in the first half of Cipla in the domestic business, and management said growth will come in here. So we are seeing 8 to 10% growth. So if that is exceeded, then probably that could be the big positive.
Okay, we'll watch out for those set of numbers. That is Cipla. Darshan, thanks so much for putting that into perspective. Now let's also watch out for the numbers that came out, and a slew of mid-sized names came out, and we'll talk all about them a bit later on. But have to talk about Bharti Airtel, isn't it? It reported a loss of more than 1,000 crores in the third quarter after providing for interest on the provisions of license fee and spectrum usage charges. Operationally, the numbers seem better. Sumit is here with the details. Sumit, I remember the conversation that we did yesterday, and wherein we were speaking about ARPUs and the trajectory thereof and the other internals. How did they all stack up?
Well, the internals, if you see the ARPU and the customer addition and the 4G subscriber addition, they were pretty much in line and strong for Airtel. But do remember this customer addition and the 4G subscriber addition numbers were already known in the market. So I'll start off with the headline numbers that Bharti Airtel has reported on a consolidated basis. The revenues were up 4% to close to 2,000 crore rupees. EBITDA came in higher by nearly 5% compared to last quarter to close to 9,267 crore rupees. Margins came in marginally higher at 42.2%, while the net loss narrowed to close to 1,035 crore rupees. Now, the average revenue per user for the India mobile business, there's a key number for Bharti Airtel, that came in at 135 rupees as against 128 rupees reported by the company in the last quarter. Now, the net loss number was mainly on the back of an exceptional loss of 1,050 crore rupees, which was recorded by the company on account of interest on provisions of the license fee and the spectrum usage charges, which is still not paid by the company to the Department of Telecommunication. Now, on the consolidated EBITDA, if you see, it has come in 4.6% higher due to higher revenue and EBITDA contribution from the Africa business, home broadband business, and the enterprise business of the company. Now, some of these gains were offset by higher other expenses and marketing costs. Now, other expenses, if you see, that was up nearly 9% to close to 1,400 crore rupees, while the marketing cost for the company was higher by nearly 19% to close to 900 crore rupees, and that was mainly because of the launch of Airtel Xtreme and higher marketing spends towards that product for the company.
Now, the different geographies then, and let's start with India first, Sam.
Well, that is the main number that everyone's watching out for. So if you see the revenue from the India mobile operations, that increased by 1.7% to close to 11,165 crore rupees. EBITDA remained flat at close to 4,000 crore rupees. Now, India mobile revenue were higher sequentially due to strong 4G subscriber addition, resumption of services in Jammu and Kashmir and other parts of the countries which were impacted due to floods in the last quarter, and some benefits of tariff hikes announced in the early December 2019. Now, since this new tariff is applicable only for those prepaid customers whose validity ends in December 2019, the full impact of this tariff hike has not been reflected in this quarter earnings, and which will be reflected in the fourth quarter of financial year 2020 and in the first quarter of financial year 2021. But as I mentioned this, do remember that subscriber churn because of the tariff hikes will also be noticed only in that time period, that is in the fourth quarter and in the first quarter of financial year 2021. Now, the India mobile subscriber base, that increased to 28.3 crore from 27.9 crore, while the 4G subscriber base, that saw a strong addition of addition of nearly 2 crore subscribers, and the total subscriber base stood at around 12.4 crore as against 10.3 crore in the last quarter. Now the other geographies of Airtel, mainly Airtel Africa, which had already reported earnings that reported strong set of numbers, 8th consecutive quarter of double-digit constant currency growth, and EBITDA was at an all-time high. Now surprisingly, the broadband and the enterprise numbers, which were expected to be weak due to competition, has come out with good set of numbers. Now the broadband business EBITDA grew by nearly 34% compared to last quarter, while the enterprise business EBITDA grew by nearly 29%. Now the broadband business was aided by a stable customer base and higher average revenue per user. The average revenue per user for the broadband was at 787 versus 777 reported by the company in the last quarter. In other highlights, mainly on the balance sheet side, the consolidated capital expenditure in the third quarter increased to close to 5,200 crore rupees, while the consolidated debt was also up by nearly 9% to close to 1,16,000 crore rupees. But do remember, the company has raised funds, and if you see on a net debt basis, the debt is lower compared to last quarter.
I just have one follow-up. I mean, we all knew that the Africa business would have done well because those numbers were out earlier. I was reading a statement from Gopal Vittal, and he was saying that, I think the statement says that tariff revision undertaken in December is a welcome step. We believe tariffs must go up further for enabling the industry to invest in emerging technologies. Sumit, would you, as somebody who's tracked Bharti for so long, read into this as a sign of tariffs likely to move up in the near future?
Well, analysts do say that the tariffs are likely to move up in future, but this statement has been made by the company earlier also in the conference call. So I would not dwell much into that, because the company has been constantly saying that the current ARPU levels are not good enough for the industry and they need to move up. So that is what a statement has been coming in from the company's side earlier also, but we'll have to actually wait for another tariff hike to come in. But analysts are expecting another tariff hike to come in anytime in financial year 2021.
Okay, just one last question. What have brokerages made of these numbers? Are they in any way upping the sentiment or the target, or both on Bharti?
Well, so far nothing has been done. That's because the conference call is today at 2:30, and post that only we'll see some revisions. But the first cuts that have come in, they are saying that the numbers are pretty much in line and internals are strong compared to last quarter.
Okay. Well, Sumit, thanks so much for putting that into perspective. A busy first word for Sumit. One, the crude price fall, and then Bharti Airtel numbers. And this should be an interesting one. Like I said, remember, on a day like Saturday, when the markets came off so much, Bharti Airtel had an outing in the green. It ended in the green. And now the stock is at about 518, 519. So no weakness depicted. The numbers are in line. So no major negative news for Bharti Airtel as well. Could be a very interesting stock to monitor in the session today. But it's a wrap on First Word. Lots more lined up, though. We get in Prateek Agarwal of ASK Investment Managers to talk about his thoughts on markets and macros. A very important voice, one of the largest PMSs in the country. Third quarter earnings with C. Venkatraman of Titan, MS Unnikrishnan of Thermax, and Umesh Revankar of Shriram Transport Finance. But after this break, a full tilt towards the day's trade. Stay tuned to BQ Live.